Hi guys, Boris Dorfman here on LBC Capital YouTube channel. And I got a guest here with me, Hovig Khatchadourian. He is a loan officer with LBC Mortgage, and he's also an interest rates, he's TA expert, technical analysis, and I use him as an interest rates expert and prognosticator. You guys ask me what's going to happen with real estate, and I always tell you I don't know. I think it's going to go up for the next year or two, but the main thing that may depress real estate prices would be interest rates. So I got Hovig here with you, and he's going to talk about interest rates. So without further ado, is Hovig. Why don't you introduce yourself?
Sure. Thanks, Boris. My name is Hovig. I'm with LBC Mortgage. Been in the business for over 25 years. I'm a loan officer with LBC Mortgage. And one of my hobby and my passion is to do a technical analysis on the stock market, especially on the bond market. So,
tell the guys what technical analysis is.
Technical analysis is basically reading the charts, and based on the charts and the technicals off of the charts, analyzing the future or forecasting the future of the price of a specific security behind the chart. In today's case, we're going to focus on the 10-year note, because that's, for our purposes, for the mortgage purposes, that's what governs the mortgage prices or the mortgage rates. So that's what we're going to focus mostly today. And I've got the daily chart here on the 10-year note, but before I go there, I prepared this one last week actually, and I sent it to everybody in our company just to have an idea about the future forecast of the mortgage rates. Every first Friday of the month, we get the non-farm payroll report, and that affects the stock market and of course the bond market. And for our purposes, we care about the bond market. On this date here, July 2nd, the payroll report came out, and the stock market was up and down, but again, for our purposes, the bond market started shooting up. And I said, and based on that report and what the bond market did, my projection was and is that we're going to have lower or steady interest rate, at least for the next short period of time. I would say between three to 4 weeks or a couple of months. And why do I say that? And that's what I want to focus on that today. So right now, this is the weekly chart. And if just one thing I want to emphasize, the price of the bond market and the interest rates have an inverse relationship. So as the bond market drops, the price of the bond market drops, the mortgage rates go higher.
The price of the bonds.
The price of bonds, yes.
Right.
So here, if you look at, this is the weekly 10-year note. Here is the top of the bond price last year, and we had right there, we had one of the best interest rates last year. As the price kept dropping, the interest rates, the mortgage rates started going higher. And I had these two blue lines drawn there like about a month or so in advance before it hit there. So these two blue lines are basically support lines. What that means is if the price of the bond stays between or above these two blue lines, then we should be getting lower interest rate for some periods to come. And it looks like for the time being, they are acting as support. And if they drop below this line, the next support is this line on the weekly chart, which means higher mortgage rates. But I will show you guys my projection for the next short period of time. So if we can go back to the daily chart, please. Okay, so this is the daily chart. And as you can see, again, the market had dropped. It stopped right there at the support level, and it started going up. In fact, as of today, this price is around here. So that means we had, the last couple of days, we had lower mortgage rates or better mortgage rates. And one of the other things that my projection, or I'm projecting lower mortgage rates for the short period to come. Like I said in the beginning, I'm a technical analysis. From a technical and trading perspective, the bond market did a technical bottom right here, where this circle is, and right here.
This is March.
This is March, yes.
March of
Actually,
21.
this is April of 2021. So the bond market, bond market did a short-term bottom in the mid-April of 2021. So that's another reason I'm bullish on the bond prices, at least for the short period to come. Especially if the bond prices break these 2 points here, that means the prices will continue to go higher and we should get lower interest rates. So that's good news for us.
So that's where interest rates peaked.
This is where interest rates peak, yes.
Inverse relationship.
Inverse
bonds
relationship.
go up, interest rates goes down. So bonds went down. This was the peak of interest rates in the past year.
No, this is this year.
Right, but I'm saying it goes back to.
Yeah, it goes back to the last year. So it's. I mean, my projection again, we're going to have similar or better interest rate for the next short period to come, weeks or maybe a couple of months. As long as the bond prices stay above this line. Okay, the long-term projection of the rates, if you look at the previous chart, the long-term projection, the bond market is on a downtrend. So that means the interest rate on the long term, they're going to go higher, but at least for the short term, we should have better rates. One more thing I want to add, the bond market is a slow moving indicator. So when I say the next short period, couple of months or so, the bond market could play in this area for months to come. So they don't go, once in a blue moon, they go from like, there's big adjustments, like they're going to drop from there to here. You know, look at here. But it takes them months to play in the same area. So we should have a better interest rate environment, which is good for us as the mortgage professionals. And that's something to keep in mind as you shop around for mortgages or for purchases and stuff. So it's good information to have.
Yeah, it's harder to forecast a year or two out, but sometimes people are trying to catch the lowest point on interest rates. It's going down, it may drop even further, but the rates are sub 3%. The rates are in high twos now. High twos?
Yeah, high twos. I mean, even mid to high twos. So
don't wait. File your tax returns and call Hovig for projections on your payments. Take as much cash out as possible from your private, primary, and investment properties, and hopefully.
I mean, this
it's
is
more
the
than
time
2
to
months.
take cash out and invest because you're basically getting 2.5 to 3%. That's free money.
Okay, so put a cap on your projections. Today is July 7th, 6th?
I would say until the end of September.
Okay, my birthday is September 21st, so until September 21st.
September 21st is a good date, so it's a change of season, so that's a good date.
Okay, so rates are gonna stay lower or go even lower until September 21st, guys. Call Hovig, his information is down in the comments. Subscribe, and I'll see you guys next time.
Thank you. Thank you, Boris.
Thank you.